Earlier this week, I outlined my bullish case for the US dollar, and price action since has only reinforced that view. So let's take a look at 4 FX major charts. Now, starting on the Australian dollar, we had this V-bottom recovery from 59 cents. But the last couple of weeks, bulls have really failed to push us materially higher. Now, we can see that we had these 2 daily closes above the 200-day average, but then we've now got this bearish engulfing day. So that is also a 3-bar reversal called an evening star reversal. Also note that that's the most bearish day, or volatile day, should I say, since the 4th of April. And that also saw a false break 59 cents and closed back beneath the 200-day average. So there's quite a few reasons there as to why I really like that as a key reversal. You've also got this bearish divergence on the RSI 2, and prices are now retracing within yesterday's range. That's absolutely fine because my bias remains bearish whilst prices remain beneath this high. And I think that at a minimum we could be looking for a retest of this April VPOC or volume point of control, maybe back toward these swing lows. Now, I'm not looking for anything major on the Aussie at the moment, but if we do get a break beneath this swing low, it assumes a much deeper correction is underway. Now, switching to the Kiwi dollar, similar V-bottom recovery, but in this case, it's really struggled to continue higher around 60 cents. Notice that we've got a double top beneath this November high. And again, we've got a bearish engulfing candle here, which also serves as a lower high compared to the one made on April the 22nd. Again, we're seeing prices trying to retrace back within yesterday's engulfing candle, which I like because ultimately my bias remains bearish whilst prices remain beneath either the cycle highs or the November high. And I think what we're seeing here is an ABC correction, which if we get wave equality would only come back down to the 200-day average. However, you can also get a 1.8 projection of an ABC, and that could see prices go down to 58 cents if we get a break beneath the 200-day average. Now, the Canadian dollar is probably my favourite of the 3 so far. It's holding above this longer-term bullish trend line, and the bearish momentum has clearly been waning since we've had this acceleration lower. It's really made hard work of pushing to new cycle lows, and it's trying to find support around these previous volume point of controls. If you zoom in a little bit closer, you can see that we've got another bullish engulfing candle, and there's one earlier in or end of last week as well. And it's not perfect, but you could say this is some sort of a falling wedge pattern, which generally projects a target near the base, or in this case around 140. Again, you've got a bullish divergence there as well, and I'm thinking we might have actually seen the low with support being found on Tuesday right back at this October the 17th low. So from here, my bias is to look for dips within yesterday's range and for move up towards maybe the 2022 high or the 1.4 handle. So I'm going to finish up on the British pound, and this really is just to highlight that there's several FX majors that are pointing towards a reversal to the favour of the US dollar. We've got this head and shoulders top forming on pound USD. What I don't like about it is you do have these support levels nearby, which could maybe prevent it from reaching the HNS target down just below 1.31. But maybe what traders could do is look for lower time frames, look for continuation patterns in line with the initial breakout. But ultimately, a break beneath these lows could at least open up a run towards 132 or the monthly pivot point, which lists at about 1.3165. So overall, the clues I'm seeing on the daily charts are that the US dollar might go higher, at least over the near term. As always, hope it's useful. Wish you better luck with your trading.